What is going on, guys? Welcome back to another video. In this one, I'm going to be showing you guys exactly why the 1 minute time frame is destroying your trading. At the end of the video, I'm also going to be going through a simple solution that you can implement and which I have personally implemented, which has helped me to increase my win rate, improve the amount of profits I make in the market, and overall just make me a better trader with literally zero extra effort. So let's not waste any more time, let's jump straight into the video. So first of all, the big problem is that most traders are getting sucked into these marketing tactics that influencers use to claim that they can make, consistent 10% months, they can make 1 to 100 trades, 1 to 50s, even 1 to 10s. And the truth is, for most people, these high risk reward trades are just completely unrealistic. But not only are they unrealistic, but they're also unnecessary. If you look at what some of the top guys in the industry are doing, and in particular, if you look at what the top hedge fund guys are doing, the more institutional side of traders, they're all going for these lower RR trades, lower risk to reward, but increasing their win rate. Because what you've got to understand is that when you're using these very high risk to rewards, there are basically two problems that you're going to come into. The first is that you're going to have a very low win rate. Just simple law of averages on, a good return for any trader throughout history. Traders have very rarely been able to consistently beat the S&P 500, which returns 10% per year on average since inception. And yeah, like I said, most of these institutional guys with complex algorithms, infinite funding, they all struggle to break past that 10% year on a consistent basis. So for us retail traders, we should be targeting even less than that to keep our expectations in check. And yeah, like I said, if you're targeting a 1 to 100 trade and you're risking 1%, you're expecting to make double your account in a single trade, and it's just not realistic. Even if you do manage to get the odd 1 to 100 trade, your win rate is probably going to be like 1-2%. And for most people, psychologically, that is not doable, because after they take 10 losses in a row, or even 5 losses in a row, some people can't even handle that, and they'll just go on a complete tangent. They'll go off and break their trading plan. We normally refer to this as tilt. So they go on tilt, they break their trading plan, they can no longer follow their rules after just 5 losses. So what are they going to be like after 10, 20, 30 losses in a row? Because if you're aiming for these 1 to 100 trades, that is what you can expect. You can expect, 10, 20, 30 losses in a row before you eventually hit that 1 to 100 trade, which then, may or may not hit take profit. The second main problem you're going to run into with this as well is that it's not very scalable. So just imagine for a second that you're trading a $1 million account, not funded, but real money, $1 million in an account. For a 1 to 100 trade, I'm assuming that you're going to be on the 1 minute time frame using a 2, 3, or 4 pip stop loss maybe. If you're executing with $10,000 risk on a position on that $1 million account, are you really going to let that trade hit stop loss after 3 or 4 pips? Keeping in mind that you are risking $10,000 across those 4 pips? Probably not. In addition to that, if you, for example, let's say your trade somehow miraculously goes up 10% in profit, so it went to a 1 to 10 risk to reward, therefore you're going to be up $100,000 on that trade because you're risking the $10,000. Are you really going to tell me that you're going to let that pull all the way back to break even, not pay yourself, and not take any profits whatsoever? It's just, completely contradictory to human nature. Most people, if not all people, are not going to be able to handle that, especially on those bigger accounts, seeing those bigger numbers. You're not going to be able to handle seeing 6 figures in fluctuating P&L, which you could have realized and taken out of the market. So let me just show you an example of exactly what I mean. So let's go and identify a trade. So higher time frame, price was bearish right here, so we're only looking for sells. We had this main hourly breaker structure. Price had swept these highs into this imbalance to the left, so that internal liquidity has been taken out after this pullback. And when Monday's price action started to push down, what we could see is basically the Asia high up here was left unswept. So we're waiting for Asia high to get taken out. And eventually you can see price pushed back up, took out Asia high, coming deeper into this imbalance to the left. So if I was one of these SMC traders looking for high risk to reward ratio trades, I would be on the 1 minute. And as we can see here, this is exactly what we would be looking for. We have that 1 minute change of character just here. And then what I would probably do if I was one of these traders would be look for a retest of this sort of area, because that was your supply which broke structure. And because we're looking for these huge risk to reward ratio trades, I'd have a very tight, probably 6 pip stop just above there. And because I'm looking for these huge risk to reward ratio trades, I'm looking to target all the way down here at these previous lows for around a 1 to 18 risk to reward. And what we can see happens, so price tags us in. If we just go back to the 1 minute, so we can see here, price tags us in, the trade is going very nicely, price is melting straight down as we had analyzed. But then once it takes out these previous lows, it goes back up and eventually takes us all the way back out, probably hits our stop loss or it hits our break even point if we made the trade break even. But the point here is, are you going to be comfortable letting the trade go around, let's say this was around 15% in profit when you were targeting a 1 to 18. Are you really going to let a 1 to 15 trade pull all the way back to break even or take you out for a loss? Probably not. And if you do that over a long enough period of time, you are just simply going to fall off psychologically and go on tilt, break your trading plan and end up with a lot of losses in a row. Not to mention the fact that in order to catch this 1 to 15 down to this point, you would have had to, first of all, probably take 10 losses in a row in order to get that, because you were only using a 6 pip stop loss. Now, at the start of this video, I did promise a simple solution to this problem, which I have personally implemented. And once I did implement this, I found that it hugely increased my win rate. My trading performance increased as well, because I was no longer looking for these huge risk reward ratio trades. I was no longer losing lots of trades in a row in order to get that home run trade, 1 every 10 trades or so. And this simple solution is simply using a mechanical take profit rule and setting a realistic target of 1 to 3 or 1 to 4. You can experiment with this to fit your own personality. Some people prefer going for a 1 to 2, others prefer 1 to 3, others 1 to 4. So I would choose one of these, but make it a mechanical rule that every single trade you take, right, you're going to target a 1 to 3 or a 1 to 4. You don't look left, you don't look any of the past price action, you just simply and mechanically go for this 1 to 3 target. So for example here, going back to that previous example, what we're going to be doing is, instead of first of all using the 1 minute for confirmation, I'm only going to be going as low as the 5 minute, and I'm never going to be going lower than that. All of my entries are going to be on the 15 minute or 5 minute. And yeah, like I said, we're never going to go lower than that. So what we're waiting for here, that Asia high was taken out. We have our directional bias as well as bearish. So we are looking now for a break of the current low, which is this one right here. We have these sort of equal lows below as well. So once we see price breaks through that, what we can do, I'm just going to get rid of that for clarity. We can identify this area of supply right here, created imbalance. You also have this extreme supply, which price could definitely test into. But what I'm going to do is I'm going to set a sell limit here, have a more conservative stop loss where it actually makes sense. So if you remember from the previous example, our stop loss was above this high right here. And the problem with this is that price could very well do something like this and still continue down. And the trade really isn't invalidated unless price breaks back above this high and then continues up. So it doesn't really make sense to have our stop loss here. It makes much more sense to have it up here, protecting this high. And like I said, this is going to massively increase your win rate because your stop loss is more conservative. So yes, you are going to get that lower risk to reward, but your win rate is going to improve. That's going to improve your psychology. You're not going to be, afraid to lose any trades anymore because you're not going to take as big of a losing streak. And overall, you're just going to go on tilt less, and you're going to have a much better time following your trading plan, and it's going to be a lot easier for you. And like I said, instead of going for like a random take profit all the way down at these lows, we're just going to have the mechanical rule to target a 1 to 3 risk to reward. So all we do is drag this to a 1 to 3, again stops covering the high, and then we're going to simply take profit at a 1 to 3. And as we can see in this example, price very nicely hit a 1 to 3, and we are now out of this trade. Keep in mind, we can always look for re-entry possibilities if we think price is going lower, but the point is, right here we have secured that 3%, so this is going to massively help us psychologically, and also technically as well, because we know exactly where we are targeting every single trade. We don't have any discretion creeping in, and therefore there's not really any possibility of human error creeping in, because it's just a mechanical rule. We do this, this, and this every single trade, and we know exactly where we're targeting. So guys, before I go and end this video, I want to set you guys a little task at the end of this video. So whenever you have chance, get up a spreadsheet, get up your back testing software, whether that be FX Replay or just TradingView by Replay. Use your usual strategy, so whether that be SMC, ICT, price action, indicator strategy, whatever it may be, but set yourself the task of testing this set risk to reward ratio take profit system. So based on my data and based on past experience, I think a 1 to 3 risk to reward is best, but you could also experiment with a 1 to 2 or a 1 to 4. I wouldn't recommend going lower than a 1 to 2 because then you're going to have a massively high win rate. But yeah, just experiment with this. Practice setting your take profit at set 1 to 2, 1 to 3, or 1 to 4. Again, I'm not going higher and I'm not going lower than this. And then see how you get on. See if your results improve. If they don't, you can stick to your current take profit system. But I guarantee that is very likely you will see improvements in your results, just because, if not because of the discretion which you've taken out of your trading and because you've made it more mechanical, it could also be just because it's easier to follow and you're no longer going for those unrealistic returns, and you're not setting yourself up for failure with these sort of unrealistic expectations which a lot of people have with these huge risk to reward ratio trades. So do that whenever you have chance, and let me know how you get on with this in the comment section below, and I look forward to hearing if this helped to improve your trading, and hopefully I've provided some value to you guys today and helped you to improve your trading just a little bit more. So let me know if it did in the comment section below, and I will catch you guys in the next video.